Okay, sir, I'm sharing my screen. Okay, so is my screen visible?
Yes, Asta.
Okay. Okay, so warm evening to everyone. So basically today Surendra, Mayank and I will be discussing about the India's Pesticide Limited, and our whole presentation is divided into three parts. So, firstly, the first part will be discussed by me, in which I will discuss all about the business model and the management, how the management is performing. Then, second part will be discussed by Surendra, in which he will discuss the key raw materials and the performance, how have the company performed historically. And the third part will be covered by Mayank, in which he will discuss the future outlook, then the antithesis, and he will compare the performance of the company with its peers, and finally conclude the presentation by valuing the company. So, firstly, I just want to give the gist about the company. So, India's Pesticides Limited are into the agrochemical business, who mainly manufacture the off-patent technical and formulations. So they, so if we talk about their journey so far, it is quite simple because their principle of business remained same, which means since inception they were into the manufacturing only. So they have started their operation in 1984 with the name India's Pesticides Private Limited. As they were into their initial years, so they have started really small. So in 1991, they have installed their first manufacturing facility at Deva Road, Chennai, Uttar Pradesh, and it had a capacity of nearly 5,000 to 6,000 metric ton per acre. But over the years, as they have expanded their business, they again installed one more manufacturing facility at Sandila, Hardoi, Uttar Pradesh, which have a capacity of nearly five times more than the earlier one. Then, as they wanted to expand and to acquire the high value molecules into their portfolio, they decided to establish their own R&D team. So in 2009, they have registered their own R&D at Tiwariganj, Chinnat, Lucknow, and later on in 2020 they have registered second R&D at Sandila, Hardoi, Uttar Pradesh. So finally, they have got listed in 2021 in the month of June, although they have been converted into the public limited in 2003 only. And the whatever the amount they have raised, 12%, 12 to 12.5% of the amount was the fresh issue, which was mainly to meet the working capital requirement. So the next slide is the business model. So as they are into the CDMO segment, which means the contract development and manufacturing organization. So they have mainly three processes. First, they procure the raw material from their supplier, then manufacture the key ingredients and formulations, then supply it to their clients. Okay, let me just focus more on the raw materials. So over the years, nearly 60 to 65% of their raw materials are coming from the local market only, and rest are from the imports. Okay, and if matlab I have tried to find out ki why there is such a major share in the local market. So I got to know ki they are the backward integrated, which means they need only basic raw material to manufacture their key ingredients. Okay, and which is easily available in the local market. Nearly 5 out of their 14 molecules are backward integrated. While if we talk about the rest molecules, nearly like at least one critical raw material are imported from China. So if we can see कि nearly 30% of the imports, 66% is coming from China only, and they have stated that in their conference call कि in the near future they will मतलब their R&D team is working on to make their rest of the molecules backward integrated. So we can expect that कि in near future इनका import का share will shrink. Okay. Yeah, if we talk about the manufacture part, so they are mainly manufacturing the key technicals and the formulations, and the what are their raw materials or what are their key technicals. Surendra will discuss in the later slide. I just want to tell you कि major share of their revenue comes from the technical segment only, which is nearly 75 to 74 percentage, and they have maintained that percentage over the years. And we can expect कि in the future as well कि major of the revenue will come from the technical segment only. Okay, if we talk about the supply part, so they are having, they are supplying their product to the domestic market as well as to the export countries. Okay, and they have a presence in nearly 15 states, while in export, matlab, they export nearly to 25 plus countries. अगर हम इनका शेयर देखें रेवेन्यू के हिसाब से तो इट्स नियरली 50-50% ओवर द इयर्स एंड मेजरली रेवेन्यूज फ्रॉम डोमेस्टिक मार्केट कम्स फ्रॉम फॉर्मुलेशन सेगमेंट और एक्सपोर्ट में मेजरली रेवेन्यूज कम फ्रॉम द टेक्निकल सेगमेंट ओके एंड if we talk about the retailer part, so they are not directly exporting the goods to the retailers, but they are having a long term relationship with their clients. So in export market it is basically a B2B segment, but that's not the case with the domestic market. Domestic market may they are directly selling to the retailers, and that's why they are having nearly 50-100 plus dealers in domestic market. Okay, so if we talk about the promoter and the board, so basically it is a promoter driven company with 66.56% share is with the promoters only, while 2% is with the FIIs and 1% is nearly with the mutual funds, and others consist of retails which have share of nearly 30.18%. If we do the promoter breakup, then we will get to know कि Anand Swaroop Agarwal ji have nearly 30% of stake, while the rest of the percentage is with his family members only. If we talk about the others, यहाँ पे उनके जितने भी relatives है वो आते हैं, लेकिन each of them who have only nearly 2 से 1% of share. uh, if we talk about the board of directors, the composition of independent director to non-independent is 1:2, which is meeting the eligibility criteria of SEBI, which is state कि if the promoter is non-executive, so minimum 33% of the independent director must be there, and they are meeting that criteria. So first promoter, is the first person is Anand Swaroop Agarwal. He is the chairman, founder, and non-executive director of the company, and he holds the bachelor degree. He had nearly 4 years, 4 decade of rich experience in agrochemical manufacturing. Then we have Adesh Kumar Gupta. He is the independent director who had completed his bachelor's degree and is a qualified chartered accountant. Then we have Mohan Vasant Tanskale. He is the independent director. He is the member of Institute of Cost and Work Accountant of India. Then we have Madhu Dixit. She holds the master's degree in science from university, and yeah, she is a PhD in chemistry. Then we have Rajendra Singh Sharma, a full-time director who holds a whole bachelor's degree in science. Then we have Rahul Arun Bagaria, a non-independent director who holds a bachelor's degree in commerce and is a qualified chartered accountant. Then we have Satya Prakash Gupta, Chief Officer. He holds a bachelor's degree in commerce. Then we have Dheeraj Kumar Jain, Chief Executive Officer, who holds a bachelor's degree and master's degree in chemical engineering. So basically, Satya Prakash Gupta, Dheeraj Kumar Jain, and Anand Swaroop Agarwal, these three are the key person in the whole company. They three of them together attend major of the conference calls. Then we have Ajit Pandey. He is the company secretary and compliance officer. Let's have some discussions on forensics. So I have given them 22 marks out of 29. Okay. So this is the first parameter in which I have scored them 0 because their CFO by EBITDA is nearly 0.38, which is quite minimum with the zero point 0.7. Okay. Then this is the second parameter. Actually, it is not major concerning, but still I have given them 0. So the first is they are paying the rent to one of his son, that is Vishal Swaroop Agarwal. So that's why I have marked them zero. And the second is they are having some kind of transaction with the company which is run by Anand Swaroop Agarwal only, and it says it was related to some chemical private limited, Swaroop Chemical Private Limited, and they are paying it in the form of some uh, testing charges, no, processing charges. Sorry. Then we have this, yeah. So actually, the company have given the loan to one of its subsidiaries, that is Shalvi's Specialties Limited, and it is the current, it is the wholly owned subsidiary of IPL, and one more loan is given to Swaroop Chemicals Private Limited, and the good part is that they are only charging 6% interest rate from them. So yeah, and this is the other factor which I have marked them zero. Actually, the percentage of other expenses to the revenue is 20%, although it's not too big, not too high, because in other expenses, their fuel expenses and some labor cost is included in other expenses, so that's why it's showing 20%. I have compared it with the Rallies India Limited as well, who are into the technical segment. So their other expenses as a percentage of revenue was quite similar to this. Okay, but as it was mentioned कि यहाँ पे मुझे एवरेज निकालना था दो कंपनीज का, तो आई हैव टेकन इंसेक्टिसाइड्स इंडिया एज वेल, तो उसकी वजह से यहाँ पे एवरेज 14% आ गया. So basically, it's not a quite concerning part, but still it is more than 15%. That's why I have marked them zero. Yeah, from here, Surendra will continue. Over to you, Surendra.
Thank you, Astha. I would like to present on their products and raw materials and key compositions and the capacity expansions, etc. So when we look in first into their product offerings, they have mainly two divisions, and one of them is technical and APIs, whereas in technicals they have mainly some key products like prosulfocarb and cremoxynil, Captan, Folpet, and diphenthioram, Giram, etc., where these are used mainly for control of crop protections in grapes, potatoes, and other vegetables, as well as Captan is used for fruits and vegetables and ornamental plants. We see their market share profiles of for Carb and Captain Folpet together are the market leaders of about 20 to 25% in global market, and these India Pesticides is the only Indian manufacturer of these three key technicals. And if you see into the revenues, only these three components are contributing around 40 to 45% of the revenues. And next followed by the prosulfocarb, which accounts for 25 to 30%. And if you look into their APIs, they have mainly two APIs, where these two APIs are used as the intermediaries in making finished pharmaceutical products. These are used, these APIs manufacture the final drugs to treat their dermatological problems, and one of them is anti-scabies drugs, which is used in treatment of scabies and pediculosis, and another one is antifungal drug that is used as a fungal infections. Next. And if you see the second division of their product, it is a formulation segment. Most of these formulations are from the domestic segment, where they are directly selling to the retailers through their distribution channels. And if you see their major products in herbicides, and one of the major product is Trisol in herbicide segment, which is used for the prevention of broadleaf weeds and woody plants in poison ivy and poison oak kind of diseases. And if you see in their fungicides, the dollar, which is used in a wide variety of fungal diseases. And in insecticide segment, they have Soldier as the major selling product, which is used for crop production in cotton and There are also some other products in formulation segment which are used against rice, wheat, which are mainly domestic crops in India. They have also have some other segments in acaricides segment. Acaricides is a different substance of a different form of pesticide which is used in tomatoes and other citrus fruits. Next. So if we look into their raw materials, major raw materials are chlorine, tetrahydro, patholic anhydride, and carbon disulfide, technical grade urea, dinipropylamine, and benzyl chloride. Um, Most of these raw materials, these are sourced from they are sourced locally, and they have some molecules which they are sourcing from China and Taiwan. And if you see their composition, as Asta said, like 60% of their raw materials are sourced locally, and only 20% of the raw materials are imported from China, and 10% from other geographies like Taiwan and etc. Next. Majorly, these molecules are commodity linked substances. They have higher fluctuations in their price, and in recent quarters, in Q2 and Q3, of their gross margins are affected due to the raw material prices, and there is a lot of compression in their EBITDA margins as well. And management was saying like going ahead, the prices will be get stabilized. Even though the management is able to maintain long-term relationship with their clients on purchasing the raw materials, and also they are able to pass the changes in raw material prices to the end users on quarterly basis. But in the recent time, there is a huge increase in the prices, so they are able to witness some margins compression in their results. And if you see their clients, most of their clients in domestic segment include Syngin, UPL, and Sharda Chrome. In export segment, Syngenta and Conquest Crop are their major clients. And if we see their relations with their clients, they have 5 to 7 years long-term contracts with most of the 50% of its customers. And there is one factor we need to look is like 57% of their total revenues are currently coming from a top 10 customers. So now we look into their growth triggers or growth plans. At present, they have two manufacturing units which are both are in Uttar Pradesh. One is Deva Road in Lucknow, which has 21,000 megatons per annum of technicals and 3,000 megatons per annum in formulation segment. And the second one, which was started in 2015, it was like Sandila plant, where they are continuously increasing their capacity in this plant as well, which is about 21,400 megatons per annum in technical segment, and in formulations it is 3,500. And company is also planning to expand their plants, and they are planning to build one new plant at Hamipur, Uttar Pradesh, where it acquired 25 acres of land for the new plant. And it also received the environmental clearance from ministry for that particular plant, and they are able to start their work soon. And they have already done some groundwork for that. And also they are increasing their capacity in Sandila plant. They have announced a capex for 6,000 megatons, for which 70 crores is in FY23, out of which 50 crores was utilized till Q3 FY23, and the remaining amount management said that it will be utilized by March. And coming to the new plant, they already spent about 20 crores for their new plant, and they have planned 100 crores of capex for FY24 for the new plant. And management is guiding around 300 to 350 crores of capex overall for the new Hamipur plant, which will be spent for the in the next 3 years. And also by FY25, the Hamipur plant will able to contribute to the revenues according to the management con calls. And whatever the capex they are spending, they are guiding that 2 to 2.5 per 5x asset turnover ratios they are expecting going ahead. And if we see their growth triggers in terms of product launches and this thing, after post IPO, they have launched almost about 7 molecules. Before they have guided for 8 molecules till last quarter Q3 FY23, they have able to launch 7 molecules, out of which total revenues 280 crores for revenues are contributed from the new molecules. And they also has two R&D center which is continuously working for the new for adding new molecules to their portfolio, and they carry out the research structure in the 3 module phases. Next. Now we will look into their performance in the past few years post their IPO. If you see their revenues, the revenues has increased at the rate 12.16 CAGR from FY20 to FY22. And in 9 months, if you take 9 months data of FY23, the revenues are already uh, higher than the FY22 overall revenue. And whereas in formulation segment, they are growing in a similar way. But whereas the growth rate in formulation segment is quite a bit higher when compared with the technical segment, though management are saying that in the going ahead also up to like 4 years down the line, their 75 to 80% of their revenues are they are able to generate from their technical space only, and the rest of from the formulation segment. And if you see the recent quarter Q3 FY23, a quarter on quarter comparison, though their total income, I mean, the revenues have increased decently, they have witnessed a dip in their gross profit and EBITDA margin from 32.2% to 23% in Q3 FY22 to Q3 FY23, quarter on quarter comparison. This is, yeah, the revenues has increased 16.1%, but the decline of 9.7% in this EBITDA margins is due to the spike in raw material cost and energy costs in the recent years or recent months. Next. So similarly, if we look at the gross margin to EBITDA to profit after tax part, um, almost 45 to 50% they are able to convert their top line revenue to gross margins, and then they are able to maintain their EBITDA margins around 20 to 25. And whereas if you see their profit after tax margin, it was around 15 to 20%. Coming to their ROE and ROCE metrics, over the years, the company has able to maintain a decent ROE and ROCE. But in after FY21, they have peaked out there. From there, they have seen a slight depression in their returns. Mostly, this is basically of two reasons. One is like they have some around 800 crores they raised from their IPO, and also due to their in the recent last 2 years, due to the raw material fluctuations, they are able to witness some dip in their ratios. But management is continuously guiding that it will stabilize going ahead. Next, we see their asset turnover, fixed asset turnover. Even the same here in FY22, they have slight dip from because of their increase in assets in the balance sheet. Next. Though the company is expanding their capex, it is also able to reduce their debt from the past 4 years. It has reduced the debt over the years, and also after coming IPO, it has completely negligible to zero debt. We can say, if you say debt to equity ratio, you can say it is a zero debt company. And cash flow from operations point of view, previously when their net profit is low, their net operating cash flow was very low. But going ahead from FY20, if we see, they have improved their net profit tremendously. So then they are able to maintain their cash flow from operations. And also, if you see their trade receivables and trade payables, they are able to. There is nothing like they are dragging it for the continuously for coming years. Every year, they are able to maintain the same uh, ratios with their clients and suppliers in trade receivables and trade payables. Next, they are also continuously spending in their expansions. In that way, they are expanding their net fixed assets, plant and equipment. So, it was continuously rising. Next is cash conversion cycle. Similarly, when there is some stress in their raw materials, they are witnessing some dips in their cash conversion cycles, and the rest is normally able to maintain the compared to the industry peers. They are in a good way in terms of cash conversion cycle. Generally, in this chemical industry, it is difficult to maintain too low. Yeah. Now, I would like to invite Mayank, so he would like to explain about peer comparisons and conclude with the valuations part.
Okay. Thank you, Suren. Yeah, starting with peer comparison. This exercise in general, it's very difficult to find a substitutable or perfect peer in general. But we can take a proxy of companies in the same industry, similar size. That is what we have done here as well. In general, I wouldn't like to next please. In general, I wouldn't like much reading into this slide. We'll just look at the perspective of IPL and see how it fares as compared to others. So as peers, as competitors, we have taken the list PI and Insecticides India as comparisons. So these are FY23 latest figures. IPL came out with their quarter 4 results last night. They have released their financial results and they are in line. They are poor, which the state was expecting in general. So overall, if we just look at this graph, it is in a very fairly well positioned situation. Great margins on paper, 38% gross, 23% EBITDA, 16% PAT. These sound very nice, but if you look uh, historic values of IPL's margin, they have depressed a lot, and I'll discuss a lot in valuation in antithesis as well. Overall, great margins. Uh, uh, Next, please. ROE and ROC are also a function of the margins of these bottom line. Recently, IPL's ROC have been in very high 30s, even touching 40s, especially ROC. But they have moderated, they have normalized as according to industry, in general sector dynamics, in terms of macro dynamics. Still very respectable, ROC of 25%, ROE of 18.5%. But these two figures are nowhere near of what you expect of a company of IPL's pedigree, but still very respectable. Things should improve in the near future. Next, please. Fixed asset turnovers. These are FY23 data included. These are net fixed asset turnovers. So assets have been accounted for depreciation as well. This shows IPL is at par with its peers in terms of effectively efficiently utilizing its assets as well. Yeah. So we'll next please. Yeah. So moving on to future outlook and antithesis. Future outlook and modes. So we'll look at it through a near-term future outlook as well, because that has been the emphasis of our exercise, our presentation in the recent times. So as Asta and as Surendra had mentioned, they emphasize a lot on backward integration. They take a lot of pride in mentioning that they are backward integrated, and in fact they are, because we see chemical sector in general, or a lot of these companies are susceptible to supply chain disruptions. We were seeing China's closing at such major impact still is having raw material costs, or companies are stocking up on inventory. Everything is very much dependent on supply chain dynamics. But if you are backward integrated, if you are starting from the first principle, you take that risk out of the picture. You become thoda anti-fragile in that way. So as Surendra had mentioned, they start from the first principle. For example, Captain, which is their very popular chemical. They start by using chlorine. They start by using carbon disulfide to start making Captain. These chemicals, these processes would be again used for captive consumption. Means whatever they produce at different stages of the supply chain, they'll use it for other chemicals, and they are very efficient in what they do. And this is their mode. This is what they mention again. They also take a lot of pride in mentioning that they have zero chemicals which start from N-1 stage, which basically means the last possible stage in which you get all the raw materials from outside, all the intermediates from outside, and you just manufacture or manufacture the final product. In that case, you would be very much susceptible to any price rise, any supply chain disruptions, anything. But being backward integrated, you become resilient in that manner. So this is a very big moat of IPL, and this is something which they will build on, and they are continuously building on this aspect. Next, please. Uh, Delivering on the promised high revenue potential chemicals, dynamic process, and new plant. So IPL, when it had its IPO in 2021, they had promised close to 8 new chemicals in the near future and till FY23. And when we did its walk the talk check, it has ticked all possible ticks in every parameter. Till now, they have delivered close to 7 chemicals out of the 8 in FY23. Quarter 4 would have hopefully the last chemical as well play out. The 7th chemical which they launched was a herbicide, and it had a revenue potential of 50 crores. So 50 crores for a top line of IPL size is very significant, and that is what its major theme has been. It makes fewer chemicals, but it has a very strong competitive advantage. It has strong position in terms of manufacturing in any other aspect, and that is reflected in its margins and its bottom line. And this is what they'll continue in their new plant as well. I'll discuss more on this, but in the new plant also they'll adopt a very similar path. They will also experiment with the CDMO business in terms of manufacturing for foreign clients, for high big clients. Next, please. And yeah, as mentioned in detail in the growth related function, strong capex guidance. This is very important for the future outlook, because this is what you can take a proxy, and our whole valuation exercise would be based on this. So in future, in the very foreseeable future, they are going for a new plant, which is the Hamirpur plant. Very strong capex guidance that should be reflected in the revenue, and a very strong future on paper. Yeah, this is the overall future outlook of IPL. I remember when we first discussed, when we had our team's first impressions, we were very happy with the company. I mean, it ticks all the boxes. It has chemicals which very few, basically even no one makes in India. They have great margins. They have strong capex guidance. It is all checklist was all ticked in this company. But recent quarters haven't reflected that, and we'll discuss that in the antithesis. Yeah. Next. So Greenfield also antithesis, not massive big of an antithesis. I'll discuss in the evaluation exercise as well. But talking about Greenfield project Hamirpur plant, the growth drivers. So we see in businesses, we see in startups, proof of concept is very important. People emphasize whatever you're trying to do, have a proof of concept, have a proof of business at a place. So companies which are able to do that, that is a very big feat. That is a massive achievement on their part. The next problem which they face is of scalability. That is where a lot of companies face challenges. They are not able to replicate the success. They are not able to deliver or follow their best practices as efficiently as they were doing earlier. So talking about IPL, current whole, it has maxed out its current plant, which is the Sandila plant, all capacity, every possible expansion they have done. And FY22 had 70 crores of brownfield means in the Sandila plant capex, and 70 crores in this financial year, which would be reflected in the venue in the next year in FY24. And then onwards, all capex would go into this plant, which is the Hamirpur plant. So Sandila plant has been maxed out. It has little to no revenue potential, and this Hamirpur plant is something which everyone is eyeing on for the future. So the major idea is that lot of things I see can go wrong instead of going right. We are seeing if even macro environment turns, if the industry bottoms out, if the favorable cycle even starts, if something or XYZ things happens at Hamirpur plant, that could really impact its ambitions. Hamirpur plant, they experiment with a lot of things. They were talking about complete a plant in which multiple phases, multiple things would be manufactured in the same plant. It's called, I think, a hyper plant. They'll experiment with the CDMO business as well. But uh, overall, they follow a very simple, a very modular approach to capex. They'll start, let's say, a capex is done. They'll start with a small unit. They'll build that. They'll start with the second unit. A very modular approach, not something which, let's say, if X module is hampered, it will not have cause and efficiency loss at the other modules. So I hope they follow the best practice in this plant as well. But again, a greenfield project, a lot of things are out of their hand. We'll see. I do hope I'm wrong in this aspect, but yeah, this is something to look out. Next, lack of pricing of prices and impactful known unknowns. So in the last in the recent con call, an analyst asked a very beautiful question. So he started off by mentioning that the company claims, IPL claims that they are fully backward integrated in majority of their chemicals, close to 5 chemicals. Uh, they're producing chemicals which no other company in India is producing. They have a very strong competitive advantage. Also, there's huge demand in the market. Actually, their capacity is the bottleneck due to which they are not able to uh, cater to that demand. And capex is guided by the demand which is existing and which is plentiful. So after setting this image, he asked why are we facing such a massive dip in margins? I mean, 10% EBITDA, 10% margin loss, gross margins have dipped below 40% this time. Analysts in IPL are obsessed with 50% gross margins for some reason. The company also says that they don't want COGS to be more than 50% uh, 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 of the bottom of the top line of the top line, but they haven't been able to pass on the prices. As Suren had mentioned, the reason that is that they're playing the long-term game. They mentioned that they don't want to hamper their client relationships and uh, do not. They're playing the longer-term game, and they hope that this will benefit out in the future. They'll have some edge on the future. But again, that is the very question that if you are so efficient in if you have such a strong competitive advantage that you are taking every possible box, but then why don't pass on the prices? Recent price increase of 16% revenue, it could be attributed to just 8% of price and 8% of volume. So that is something which is not expected of IPL. You don't want margins dip. I think Q4 would be a bloodbath. It would be a very interesting phone call to read, to go through. Yeah. Next, please. And linking the same with waning competitive advantage, competition rising. So in the recent con call, it was raised that Captain is also being now produced by other some other company. They are also starting the manufacturing. So IPL, when it started off its IPO, it had very good position. Chemicals it was producing were of no one else was producing. They had very strong competitive advantage. Moving forward, as they'll ramp up their capacity, as they'll introduce new chemicals, I believe this very small pool of this lucrative chemicals will become smaller, and they would have to uh, jump into molecules which would have competition, which would also depress their margins and will reflect in their margins aside from the macro conditions. So yeah, overall not an antithesis in general, but yeah, I feel what people were expecting of the recent quarters haven't delivered the same. So they just yeah, apologies. Yeah, next please. Yeah. Right, moving on to valuation. Yeah, Asta, could you please open the Excel? Um, I think you can skip out of the presentation. So the biggest takeaway of Nirvana's HG Infra session was that to have some sort of a narrative behind the numbers. I mean, if the management is saying just 20% revenue uh, revenue guidance, just don't take their word as a um, as a line on a stone, writing on a stone, and have some sort of a rational behind that. So, Asta, could you go on to the assumption sheet? Yeah, could you zoom in this asset turnover, this volatility? Yeah. Scroll up. Yeah, just so asset turnover, which Gaurav and Nirvana sir had a discussion on operating leverage as well. That I've taken as a proxy, and it is a good enough proxy because, as we mentioned in FY 2022, they did 70 crores of capex in their Sandila plant, and that was very beautifully reflected in the revenue top line increase as well. It grew by more than 140 crores, which is more than two times the asset turnover. And in FY23 till quarter 4, quarter 3 they were on track with the 70 crore capex. They had done 54 crore of it, and hopefully in the quarter 4 we'll get the news that the target has been hit, and this would be reflected in next year's revenue. And then onwards, FY25 onwards, the Hamirpur plant will scale up and its capex will come into play. So margins recently have dipped. I mean, EBITDA for FY23, which are the latest figures, is close to 23%. It has bottomed out, which is very low as compared to what investors or existing investors are expecting. So the asset turnover, they gave a guidance of 2 to 2.5. And that is, I have also stuck with that because I believe that is very achievable. They have grown their top line without any issue. Margins and those other factors, the contributions have been a major problem for the sector in between. So yeah, the best scenario asset turnover 2.5, normal 2.25, and worst of 2. That would be reflected in the capex. That would be reflected in the revenue. So probability of scenarios in the recent terms, seeing how chemical industry or chemical sector is generally going. India Pesticides has very expensive inventory on its hand, very expensive costs on their hand. So in Q2, their Q2, Q3, they had a lot of factors they attributed to their drop in margins. One of them, of course, was raw material increases. Others um, like power costs and etc. So it was expected in Q4 also they are sitting on expensive inventory or costs, and that has reflected in the margins. They have again dipped. If you just compare YOY increase in their costs, it is more than 50%, close to 50%, which is way more than how their top line has grown, and that has reflected in the margins. So just taking a proxy of the top line. So in I've taken the 3-year. Asta, could you go towards the right? Right. Yeah. So the worst case scenario I mentioned, it would grow. These are again approximation. 17-year CAGR for the top line. Best case scenario 20.5, and normal I've taken 18.5 years top line growth. Talking about margins, as mentioned, they'll stay put in the range of 23 to 27%. Same will follow for the EBITDA margins as well. 23 in the worst case scenario, 25 in the normal, 27 in the best case scenario. And these are very conservative. I think if things what IPL has been delivering, if things ease out on the macro scale, IPL is very well positioned. Its product offering, its competitive position, that it will recover very well when things bottom out. But in the near future, I see that it is a good entry point, and that would be reflected as well. Yeah, also could you go on to the valuation sheet? So for the scroll up person. Yeah, so top line has been selected as best. Also, could you go back to the assumption sheet what we have selected as cases? Yeah, so revenue, I think top line would have no problem growing again, attributed uh, to the past and as general. So I think it should comfortably grow at 20%. Margins are depressed. We'll see in the Q4 con call as well if they are still sitting on high inventory, or if all of that inventory has been replaced by easing inventory prices. So that would be a good sign that margins will revert back. So as I mentioned, analysts are obsessed with 50% gross margin, but considering that they have greenfield projects, their very small pool of chemicals are depleted out. I don't. The management also doesn't always agree when analysts ask the 50% gross margin question. They also say that would be on a higher end, that would be on an optimistic end, and that is what we have reflected in our margins as well. So in general, I don't see a massive re-rating or massive upside to the stock. If holding period is long enough, close to 3 years, till Hamirpur scales up, till in general the sector reverses, the cycle reverses, then IPL should uh, bounce back. But in the near term, I don't think there are any growth factors or any massive re-ratings. But it is at a very good entry point. It bottomed out at close to 15 P. It is at 17.5 P. And in our estimates for a normal, I think it is just 8% upside for a 1 year forward P. Yeah, I'll conclude with this. Overall, a very sound company going through very volatile phase. So, uh, yeah, I'll conclude with this. Thank you.
Great presentation. So I had a question. One was, yeah, when you were explaining regarding the growth of the company, right? I just take me through it. So in the next 1 year, what do you expect the margins sort of to normalize or stay flat? Because this year we should have a El Nino year, so basically less rainfall. Also, probably because of less rainfall, there could be less pests that's growing because you will have less swampy areas and all. I'm not sure how it would play out. Have you come across any such questions asked by analysts regarding the product use this year, or sales growth?
So in the recent Q1 and I think Q4 this year, one chemical which they launched was a herbicide. I think goes into rice or something. And it is
Hmm.
very seasonal nature. I mean, it would have a massive consumption in XYZ quarter, Q1 or Q4.
Hmm.
I think that would be a growth driver in the very recent terms. But in general, if talking about El Nino or
Hmm.
those macro factors, that hasn't been raised. But yeah, I think Astos, when would you like to add in?
Actually, in con calls, these questions haven't been raised by any analyst.
Right. Okay. Okay. Asta, can you also keep the presentation on? I mean, instead of
Okay,
the
okay.
screen, yeah, so that we can jump around. My
Yeah.
next question is, so they are trying to become a backward integrated company, and they have, I mean, they currently have good value added products as well, where they have high margins, right? That's the positioning of the company. So to improve their margins, they're kind of going backward and trying to also source the raw material, something like that, right? If
Yeah,
Yes, sir.
basically,
okay.
yeah, their main aim was to not to depend much on other countries, or not to fluctuate with the market pricing in terms, so that they are able to produce their intermediaries from the like least raw material which is available. So that's what their motive. I think. As
Yeah.
Mayank, what do you say?
Yes, so that is what they pitch as the strongest point. Of course, they have such a good concentrated offering, uh, and backed by this factor of being backward integrated, that they would be resilient through these phases. Apparently, they haven't been. So that is something which would
Yeah.
reflect in the 35% re-rating from its all-time high. So I think they haven't delivered on that.
Yeah, possibly. I mean, there are many factors, but these are good
Mm.
opportunity just to see, because what I see is this company does not have much operating leverage. So they have very low operating leverage. So in a bad year, it's not like they're getting hurt too much. Their fixed costs are not very high. So that the variable cost and fixed cost, they more or less, what I see. I mean, from my calculation, it's not very high. So over here, they're not suffering big losses, right? And in a good year, also they will not benefit in case their revenues jump up quite a bit. Uh, why is the company not taking any sort of debt? Any view on that? I mean, why not
So
use
I
more
think
debt?
that is net debt to equity ratio.
Hmm.
Astam Suren, could you confirm? I don't think it is debt to equity.
Which equity?
The debt free
Yeah,
argument.
So basically, the company is kind of building their
basically
capex
they
at
have.
this. Huh? Tell me, Surendra. Yes.
This one.
Yeah. They have a lot of cash from their IPO. So I think they want to keep that debt low for now. Going ahead, if they require more,
Right.
I think they are able to take the debt. I'm just thinking like that. I do not aware this exactly.
Actually, in their concurse, it was mentioned कि if they will face any working capital requirement, so they will further issue the shares, not go for the debt.
Yeah, yeah. So I don't like this because you see, taking debt is sort of. I mean, Nirvan, you might disagree or you might have a view, but see, your operating leverage is low, right?
Mhm.
And you can probably take a higher debt and not issue equity because how do I put it? I mean, in case. Uh, yeah, maybe I'll gather my thoughts and
Gaurav,
tell
if
it.
I can just
Yeah.
if I can just come in, since they've just done an IPO like 2 years back and they've raised a lot of, not a lot, but how much did you say, Asta? The offer for sale was only 12%.
Yes, sir,
Uh,
12.5%.
And how much did they raise?
it was 100 total raise. They raised it.
It was 8 billion.
800 crores was raised, or that is including so 12.5% of that came to the company, is it?
Yes, sir.
So around 100 crores. Okay. So maybe that is the reason, Gaurav, that
Yeah.
they still have some cash on the balance
Hmm,
sheet. So maybe some years down the line to grow
hmm,
further, they will need debt because their cash generation is not amazing. It is quite poor, in fact. It is less than 50%, as
hmm.
Asta highlighted. So they will need debt to grow further. Right now, I think they had some IPO fund.
Right. Right. I mean, my question was, can't they speed up their or can't they put in more capacity right now? But yeah, possibly that could be
I mean, opportunities
right.
have to be there, right, Gaurav? Like to kind of maintain their ROC profile, margin profile, etc.
Got
So,
it. The next thing that I think Mayank you showed were the company could in the next 3 years go to almost 1,600 crore sales, right? Top line growth in the
Correct. So
valuation.
that is
Slide 29.
yes, sir, correct. Yeah, that would
This is
be so that is for the also which
Valuation.
case with this non
Which
the
one?
assumption sheet.
assumption. Yeah, yeah.
Yeah. Yeah, so I think 20, yeah, you can go to best. I think that is also very, very peaceful.
In the best case scenario, right? It goes
Yeah.
up till
Asta, just select the best case scenario.
I have to familiarize with this table.
Best case for margins or revenues, man? Both.
So it's talking about, I think, the top line 1600 rate.
Okay.
Yeah,
Okay.
yeah. I mean, let's take the best case. I mean, you have good margins. I mean, margins from I think
Yeah,
which year?
45% I think we should take because they've so far not gone below 45.
Mhm.
Hmm.
So, yeah.
So this year's, I think it is close to below, it has reached below 40. So you have seen its Q4 results.
Yeah, but it's still 45% gross margin, no? Like, at least on screener, I'm seeing it says 45% in terms of COGS and inventory adjusted.
Nirvan, this number will go down. No, once the annual report comes for FY23.
Why will that happen?
I mean, right now they won't have the employee costs and all of those things in the. I mean, I
Yeah,
don't know. Do they? Is that line item there? Like we
of course.
discussed last time, right? For the COGS. Sorry, that's
Okay,
for
you mean
SG&A. Yeah, yeah.
you mean screener will reclassify something after? Okay.
Yes,
Yeah,
yes.
but for COGS, I don't think they will because they don't pick up items from other expenses and put it in gross margin. No, we checked.
Okay.
So they keep it restricted to, I think, cost of goods sold and change in inventory and stock bought out from the channel, etc.
Right. Cool.
So,
I think
so I think we should go to the first sheet, no, Astha? Like you select this scenario, then what is happening, we get to see only in the first sheet, no? Yeah. So, Mayank, what is happening in the best case scenario?
I think it was very very optimistic, even though all these factors I took as a very conservative estimate. Hasta, could you scroll down? Close to 90% upside for 3 years. No, no, this is best.
Yeah, this
Oh
is
yes,
best.
so the P I've taken out as a very very bottom D.
What
So I
is the
think
PE you've taken?
I've taken the bottom 15%. It bottomed out during that time. Taking
15x.
yeah, so it is at
Okay.
8.1 first. Yeah, it is close to 90% upside for
So just a
50. Yeah.
general question to you and all everybody here. So this company is listed for around 2.5 years. Okay. It has done an ROCE this year, which is supposed to be a bad year. It has done an ROCE of, as per screener again, these figures may be wrong
So
if screener is
I've shared the latest result in WhatsApp. So FY
yeah,
23 Q4 into
right. So where have you shared on WhatsApp, is it?
correct. Yeah.
Okay, okay. So I'm just looking at the screener numbers. As per screener, it's 28% ROCE. Okay. So
Mm.
28% ROCE, around 18, 19, 20% ROE. Cash generation is not that good. Uh, this latest year's cash generation I don't have, but FY 21, 22, I think Asta said around 40%, right? CFO to EBITDA. So that is not very good, but very good ROE, ROCE. What kind of multiple would you give to this kind of a company? PE wise, like let's go one by one. Like let's hear what everybody thinks. So starting with Gaurav, maybe.
I think I would give it similar to right now PI. I mean, my personal feel.
Okay,
Whatever.
okay,
Yeah, PI is right now. I have to check what is PI. So
sure.
44. Yeah.
Yeah, PI is very high, Gaurav. I think PI has
But
established a
PI,
trust in the market over many years. So I think PI gets a premium because of that. But fair enough. So
but
we'll just take a
I would
uh,
say around 30, 35 should be fair
right,
enough if they are able to deliver in the next 2 quarters and also their execution is good, especially with the
right,
Hamirpur plant.
right, right. Okay, Mayank, how much would you give a company like this?
So I think mid 20s or higher 20s would be very reasonable.
Right, Surendra,
I think I will be at 30, and I
30
feel that it is undervalued right now.
currently, right?
Yeah.
Okay, Asta.
Sir, actually, I didn't get your question.
My question was for a company which is generating, say, 25% plus ROCE
Mm-hmm.
and around 18 to 20% ROE, uh, zero debt, EBITDA, CFO EBITDA is not that good, around 40%. What kind of P multiple would you give this kind of a company?
It will be nearly 20 to 25, sir.
20 to 25. Okay. My answer is also around 25 because 25, why? Because if it's a bull market, this kind of company can easily get 30, 35 in the range that Gaurav has said. Considering the environment right now, I mean, if I'm thinking from the point of view of buying, if it is anywhere between 20 to 25 and closer to 20-ish, I'll happily buy it, right? So from that perspective, if we can all agree that at least 20 it should get, right? So then if you change the multiple to 20, Mayank, you're saying that EPS in 2025 will be how much? 27, right? In the best case scenario.
Hmm.
So 27 into 20 is around 540 rupees. And the share currently is at 219.
Hmm.
Okay. So that is around 2.5x. So I don't think if the company delivers these number and if our calculations are not wrong, I don't think it is completely impossible that such a thing might happen. Uh, the numbers, I think, Mayank, if you're confident the numbers are right, a 20 multiple on this number, I don't think is anything abnormal.
Correct. So I think very scalability would be an issue. I think Sandila plant has run its course. Amirpur,
Hmm.
it is a very new undertaking for them. The
Right.
very idea which they were selling that producing chemicals which no one is producing. They have little to no competition. I think that
Right.
is also phasing out. So yes, scalability. I think Mr. Harsh's video also we mentioned about
Right.
above 100 crores and X things do tend to slow down. But yes, sir, again,
Above 1,000 crores. Above
yeah,
1,000
topping.
crores.
But Sir, I'll agree. I
Right.
think when we first also had a discussion, I mean, it is a very sound company, but we see in
Hmm. So on capex,
So
actually, I
Mhm.
have some. Sorry, Surendra. I have some questions on capex. Let's go through them. So why are they doing the capex? I understand they've run out of capacity. This capex is going to be for the same products or for new products?
so new product.
Sir,
Yeah, so
sir, actually, it will be for new molecules.
Have they told about those molecules? What molecules they are?
No, sir. But they have said कि they will come into some new molecules. अगर existing molecule की demand ज़्यादा है लेकिन capacity fulfill नहीं हो पा रही है तो they will think upon it. Otherwise वो नए molecules के लिए specifically है.
But I heard Mayank say कि अभी existing plant का almost capacity full हो चुका है. So like for Captan, for PET, etc. Won't they need capacity?
सर एक्चुअली कैप्टन और जो उनके ओल्ड मॉलिक्यूल्स है उसमें डिसेंट ग्रोथ हो रही है, इतना कुछ ज़्यादा ग्रो नहीं हो रहा है, तो वी डोंट थिंक कि उसकी इतनी कैपेसिटी अब होगी. अगर होती भी है तो फिर वो हमीरपुर डिस्ट्रिक्ट से ही, मतलब जो भी उनका नया प्लांट है वहाँ पे करेंगे.
ओके. करंट कैपेसिटी यूटिलाइजेशन क्या है? कोई फिगर है हमारे पास कॉन से या कहीं से?
स्पेसिफिक मॉलिक्यूल का
नहीं
बोल
नहीं,
रहे हैं
प्लांट
सर.
का.
so overall it has been in the high 70s or 80.
हाई 70s. तो ऐसा नहीं है कि मतलब एकदम ही कोई ग्रोथ, मतलब नेक्स्ट ईयर निकाल लेंगे वो अगर हमीरपुर प्लांट नहीं भी आया, राइट?
यस सर.
So I think they had mentioned that that is their, I mean, effectively peak. I also had a tough time
Okay.
wrapping my head around it, but I think that is what they'll taken for.
नहीं होता है in some industries 75% is
Mhm.
peak. Yeah, sorry
Yes, sir.
Surendra, you were saying something.
no, I feel like previously, like 1 or 2 years back, there is some because of copate and phosphate, there are some three molecule. Those are the main 40% revenue contributors.
Mm-hmm.
But out of those, the top two molecules where they are witnessing some ban from European countries and US, North American countries, but not exactly ban. There are some signs of ban, but and then what I read is there is nothing to worry right now. Maybe that is the reason why they are expanding more capacity in order to, and also that is the reason why market is not valuing it right now.
Okay,
I
so
think
have
so.
they talked about these possible bans, or has any analyst talked about these possible bans in a con call?
No, they I didn't see any market asking for the for these things because they have some news, but there is no ban right now. But some signs, similar things like that, I have read somewhere.
Okay, so see
Yes,
whatever.
sir. I also,
Yeah, man.
yes, sir. I also actually found out from Value Picker about this news. I think it hasn't been raised in the at least last 4 quarters in con calls of issue of any banning or export.
Okay,
Even previous phone calls also, no one asked about it.
Mm-hmm.
okay. So which molecules are we talking about? In case you guys remember, that may be under a threat of ban or something.
The top three molecules which are contributing around 40% of the revenues. Just a second, I tell the names.
Okay, you can check meanwhile, Surendra. So that is a very important data point that I I wonder why you guys haven't put it in the presentation. Because see, I think all of you are agreeing that the company is undervalued, right? Looking at just the figures from the top, if somebody goes through screener, it would appear that the company is undervalued. So if you guys feel this is one reason it could be undervalued, just mention it in the presentation. Yeah.
So I think the falling short of expectation is the biggest reason. I mean, they had mentioned everything
That
is put into play. They should.
that is the key thing, Mike. If we can figure out whether the undervaluation is because of some temporary underperformance versus long-term uncertainty in their established product, your attitude will completely change with respect to considering this a lucrative opportunity versus a trap, right? So that is what we need to basically understand. So if analysts are not asking, then the probability, I would say, I would assign a lower probability that something like that is really happening. But maybe if there's something on Value Picker, maybe worth looking.
Correct. So the majority of these questioning or hard questioning was revolved around their margins or accounting for their book,
Right.
their balance sheet, ki why this other expenses has peaked or has shot up. Uh,
Got
Discussion
it.
on the competitive. I do recall. So you had mentioned Ayush Mittal's interest in the
Hmm.
stock, right? So
Hmm.
I think in every con call he asks very insightful, very deep questions
Hmm.
on the on subject. Even their PMS, their analyst also asked a lot of questions, very insightful questions. And his question, I think, revolved around the competitive advantage that others are also producing Captain and XYZ things. So I think banning was not the
Okay. Not the immediate
main
concern.
main yeah
Okay.
main
Yeah,
So,
discussion.
because
yeah,
they are
sir.
under assessment, but that's the reason I think analysts are thinking about that.
Okay. They are under assessment, as in an assessment.
Yeah, yeah, it is like EU assessment since 2015. It has emerged, but nothing concrete.
Okay. Okay. Got it. So, one other basic question. So, Mayank, you said the analysts are obsessed with 50% gross margin. The reason they are obsessed with that is, in general, any company in the chemical space which is earning more than 50% gross margins consistently, that kind of company gets a tag of being a specialty chemical manufacturer. And specialty chemical guys are those who are manufacturing some difficult chemicals where they have great relationships with their partners, and they are able to therefore command pass through price, raw material price hikes, and maintain that kind of margin, and therefore the market values them higher. Okay, so that's why all that focus on 50%. So my basic question is, in simple one or two lines, can you guys explain what is this company doing that it is able to earn 45 to 50% gross margins? I heard that it plays only in off-patent chemicals, so not like it is doing CDMO or anything. What is it doing that it is able to earn such high gross margin?
Maybe take
So
some
what
time.
I think is
Yeah.
the major molecules which are exported, contributing 40% revenue, and India Pesticides is the only manufacturer in India for the three molecules, and also globally they have 55% of market share for these three molecules. It is contributed by India Pesticides. So that is one of the main reasons, because no other competitor in those particular molecules for that. So
Yeah,
they
so
are
my
can
question
I
is
have
one
a
level.
I want to
My
yeah,
add
question is
to this.
one. Yeah, just a second. My question is one level deeper, Suren. That okay, I
okay.
accept that nobody else is making in India. They have 25% market share in some molecules in the world. My question is, why is that? Is it because they have some specific process chemistry which makes them the cheapest cost? Is it because they are fully backward integrated, which no other player is able to do in India for some reason, as a result of which they are the cheapest cost? So, any idea on that?
सर as far as I can say कि they are backward integrated and अभी उन्होंने दो intermediate molecules अपने after IPO launch किए हैं उनमें उन्होंने ये कहा है कि वो intermediate all over India कोई produce नहीं करता तो they have a advantage over that तो
So those intermediates are go into manufacturing, say, pulpet or
yes sir
pro-
और
full.
40% उनका captive consumption है and 60% they will for
Acha.
sale
40% is captive consumption for these two intermediates.
yes sir
Okay.
और rest of the
And do
then
you
they
know
will
which
do
technicals these two intermediates are going into?
sir I think there is one just wait a minute I don't know how to pronounce that
Prosulfocarb, क्या?
no
अच्छा.
it's pretty sure इसका intermediate aniline करके कुछ है
अच्छा. But is it like, is that technical a large selling technical for IPL or a small one?
सर एक्चुअली इन्होंने रेवेन्यू पोटेंशियल का 100 करोड़ बताया है
अच्छा, तो बड़ा ही है.
यस
Okay.
सर यू कैन
और
से
ये नया ये टेक्निकल इन्होंने शुरू किया है क्या? ये
यस सर ये अभी का ही इंटरमीडिएट है सर
ओके. ओके. ठीक है. So these bunch of questions is what will get us to the meat of IPL. So I've already written down these questions. Gaurav, I think we should have a question answer discussion on this. Maybe the team can take
Yeah.
a couple of days and answer those questions. And then what we'll finally arrive at, that will give us a very rich view. So this presentation and valuation Excel gives us a very nice first view. Answering those questions should give us the second level view, which will help us then sort of, you know, look at probe into 3, 4 of the key areas and then find an answer.
Yeah. See, Nirvan, one thing that's been interesting me is while the industry is degrowing, I mean, say, I mean, in the last year, FY23, if you look at their competitors, which Mayank showed, other than PI, uh, everybody were growing at like 8%, 9%,
Hmm.
their revenues, right?
Right.
India Pesticide grew at 23%.
It's very right.
Yeah, so there must be something about this company, and this is what even Ayush was saying. I mean, this guy smells that, right?
Hmm. Hmm. Yeah, that
So
is true.
i-
Absolutely.
it's going. It should have something, and this is what we will probably have to find out.
Yeah. Yeah. So even in this quarter, they've grown 12%. So it's not bad.
Huh.
It's slowed down, but it's not very bad.
And they are also sitting on very low operating leverage. I mean, that's what your formulaic sort of shows, and that's very good for a company like in the chemical sector, right? For a bad year, they don't get hurt, and in a good year, they grow incrementally. It's not like they'll have a sharp jump, but more linear in nature.
Yeah. But with CapEx coming, I think that will change a little bit because with their new plant coming,
Hmm,
obviously
hmm,
they'll be
hmm.
sitting on a lot of operating leverage then.
Yeah, yeah.
So, yeah. Okay, one last question. Asta, you said they have launched 7 chemicals after IPO, no?
Yes, sir.
What is the revenue contribution from those 7 chemicals? Have they declared that?
सर हाँ सर, मतलब जितना भी रेवेन्यू इनका 9 मंथ में हुआ है उसका सिर्फ 10% ही अभी न्यू केमिकल से आया है.
9 month revenue का 10%. मतलब 260, 260, 780, around 800 का 10%, 80 crores.
Yeah.
Okay, 80 crore revenue. Okay, and this is in the last 2 years they've launched these 7 chemicals and already like they are at 80 crores, which is like 8% of their top line, which is good. Okay, and are they talking about the new molecule launch pipeline? Like, are they saying that there are 5, 6, or 10 molecules which are awaiting launch or something like that?
नो सर, अभी इन्होंने जो 8 मॉलिक्यूल है, अभी वो जो एक मॉलिक्यूल अभी और बाकी है उस पे वो ज्यादा फोकस कर रहे हैं. मतलब
Okay,
जो लास्ट कॉन कॉल था उसमें उन्होंने बताया था कि बाय नवंबर मतलब लास्ट क्वार्टर तक हम जो 8 मॉलिक्यूल है वो भी लॉन्च कर देंगे. उसके बाद
okay,
वो हमीरपुर डिस्ट्रिक्ट पे वो प्लांट है उसके कैपेक्स का डिस्कशन कर रहे हैं. तो अभी मॉलिक्यूल के बारे में सच कोई डिस्कशन.
got it. और ये 8 मॉलिक्यूल्स का टोटल रेवेन्यू पोटेंशियल कितना बताया है इन लोगों ने?
सर इट्स नियरली 280 के अराउंड करोड़.
280 crore. Okay,
यस सर.
280 crore full potential. Okay, right. And one
So,
question.
so on that, they
Ah.
are predicting that FY24 would hit close to 1100 crore the top line. This maxed out
अच्छा.
Sandela plant.
Sorry, last sentence नहीं समझ आया. 1100 crores?
So from this Sandela plant, including the new chemicals which the capex has been done in the last 2 years, and then growth will
Okay.
come from the new one.
So next year, are they will the new plant get commercialized next year or FY25?
So commercialized in terms of that, it will contribute to top.
Yeah, revenue.
Yeah, it will play out in 25.
End
Will
of
play out in
FY
20.
end of FY24. That's what.
End of yes.
हाँ,
Yes.
तो मतलब मोटा मोटा
But the next
we can
quarter
assume.
one of
हाँ,
25. Yes.
Q1. तो मतलब क्या FY24 में they are guiding for only 10% revenue growth. 1100 you are saying.
Yes, so that wouldn't be 10, right? They hit
That
close
would
to
be 10.
900. They
No,
closed.
they hit.
Yeah, in FY23 they hit 900. So
Okay.
200 by 22% plus 20%.
Sorry. I was looking at Punjab Chemicals. Yeah, 885. Yeah, okay.
So-
So that's a decent. Yeah.
Yeah, Nirvan, one thing. So even if they have newer chemicals, right? Looking at capacity, they don't have free capacity, right? तो उनको अगर नया chemical sell भी करना है तो किसी existing chemical को बंद करके अपने reactors में नया chemical डालना है.
नहीं यार, वो लोग देखो, अगर 900 करोड़ किया है और 1100 गाइड कर रहा है, मतलब कैपेसिटी तो है ऑब्वियसली ना।
हाँ, मतलब हमीरपुर प्लांट हो जाने पे, मतलब that would be the upper limit till they again
नहीं,
put up
दैट्स व्हाट आई एम चेकिंग विद मयंक कि मयंक, इज दिस एक्स ऑफ हमीरपुर, राइट, बिफोर हमीरपुर?
Yes, so this is because in this year they had planned to increase the Sandila plant capacity by 600 metric tons. So
Okay.
2000 has
Ah,
been done, and 2000 is left. I think I'll Asta, could you?
हाँ
Okay.
हाँ, you
Yeah, I
are.
think they had a slide in their presentation as well of the timeline of what they have achieved in terms of
Mhm.
capacity
Okay.
increase.
So they've done some debottlenecking
hmm.
capex in their existing
Mhm.
Yes.
plant to increase capacity. And without Hamirpur, they can still do their guiding for
Yes, yes.
1100 in
So
FY24.
that was a very
Okay.
beautiful path which they had put in place that it wouldn't cause any bad year on.
Right,
Yeah,
right.
you should have shown this because this is what I was trying to get to. ये
Yeah.
I
बहुत
think in
important है.
then their latest PPT, I think they have a very beautiful slide
Right,
on this
right,
front.
right.
Nice.
Yep.
See, these are the
So,
triggers, team, that we need to understand, right? That these are the triggers that, so the question and answer session that is going on, we are trying to understand what are the triggers. See, triggers can happen on margin front, triggers can happen on revenue front. ठीक है, मोटा मोटा यही है। तो कभी भी एक कंपनी को एनालाइज करने के बाद ना, या कोई कॉन कॉल मैं सुनता हूँ, तो आई ट्राई टू नोट डाउन two bullet points. What are the revenue triggers that can play out? What are the margin triggers that can play out? So revenue triggers can generally play out from, say, capacity expansion, acquisition, okay, a new line coming up, which is capacity expansion only. Sometimes it can also play out from product mix change, where you're increasing the production of a high realization product, right? Similarly, your margin expansion can play out through backward integration. It can play out through RM cycle going down, so your cost of goods sold will be lower. Um, it can also play out through a product mix change, where your gross margin increases because of the kind of product that you're coming into, right? So these triggers, it's very essential to capture in your presentation. So this debottlenecking capex is one such important trigger, which ideally should be there in the presentation.
yeah.
Yeah.
अच्छा, just I want to clarify. So by end of FY24, we should have 1100 crore capex coming from their current plant, Sandila plant, and then from Hamirpur also. That's going to also come online by the end of FY24, right? Or FY25? कौन सा है?
So in FY 2022, they did close to 70 crore in Sunday to increase the capacity,
Hmm,
right?
hmm,
Now that is very beautifully reflected in the 23 figures. I mean, आप उसका definition निकाले, it would be more than 140, more than two times of their turnover.
hmm,
Now in FY23, they have done again 70 crores.
hmm,
Last, they are on track, they will complete it.
hmm.
Now that effect will come place into FY24, which is what we have discussed,
And
that 1100, it would peak, and they have little, no area, no scope for growth there.
correct.
In FY24, they will do 100 crore capex in Hamirpur plant to start scaling up via modular approach.
Hmm.
They start up by 1-2 chemicals, and then that would play out in FY25.
25
This,
onwards.
yeah, yeah,
Okay, so
and this
so
is. Hmm, hmm.
yeah, please continue. Then I'll ask. Yeah.
No, no, sir. Yeah, for
So
till
so
FY25.
yeah. So FY25 onwards, the entire play would be on Hamirpur plant, right? वहाँ पे they'll add more and more capex or debottleneck, and then they'll start generating more and more revenue. Something like that, right?
Correct. So that is what I mentioned, 100 crore for 3 to 4 years till it maxes out.
Right. So maximum earning potential in the next 2 years, probably next two, say end of FY25 is 1100 crore, and maybe from your Hamirpur plant, I don't know how much it would be.
They've
It
guided
won't
for
be
2 to
2.5.
2.5x asset turns is
Hmm?
what I think.
Yes, yes.
That would be probably 3-4
हाँ,
years
so
down
you
the line,
can,
No, no, no,
so you
sir.
can
right?
say this.
They had mentioned. Yeah.
Yeah, sorry, Mike.
Huh?
You go ahead. I think how it works, Gaurav, is gradually ramps up. So when they give a range, you can sort of multiply the lower end of the range to get
Hmm.
sort of starting kind of revenue in 1-2 years, and then it ramps up to the full potential. Sorry, Mike. Go ahead.
No, no. So that is what was the point, that they start with a
So
modular approach. So that 100 crore would go into making the parts for, let's say, 2 or 3 chemicals, which they guide every year. and that would reflect in the revenues very perfectly. And they mentioned they take less than close to 8 to 9 months for the capex to actually become commercialized or have some effect to contribute to revenue. So they are very efficient on that.
Yeah. So around 1300 crore, that would be growth in their sales numbers.
Yes, sir. Yes, sir.
Around 1300 crore.
For
Added to that,
FY25. Yeah.
FY25, so 2 years. Added to that, if you have a valuation re-rating, so I think कितना है अभी 15 है क्या?
नहीं 17 है
17. Yeah,
17 है.
17.5 है
हाँ, मतलब even if you go like 25, I think this is I mean, doubler in 2 years.
yeah
No?
if everything plays out it
Plays
is
out well. Yeah,
yeah
of
it
course.
is possible
Of course.
yeah
Of course.
one question I have is I mean the sales growth if I look at it in the last 2 years since listing in 2 years they've grown by 37% which means the CAGR is around 15%. Okay, then it's okay. Then I mean 1300 by FY25 is actually faster growth than their recent history. So that is fine. Okay. One question, Mayank. You were doing all your calculations using a fixed asset turn of 2 to 2.5, but if you look at the balance sheet and P&L, the current net fixed asset turn is 3.5. No, on a fixed asset base of 248, they have done 885 crores of revenue. That is 3.5x.
Yes, so that is also I don't have much clarity on, but that has been the major discussion area of discussion in Confluence. So I think this is something which the analyst and the management wholeheartedly
सर
agree.
आई वांट टू ऐड द पॉइंट कि पहले जहाँ पे ये प्रोडक्शन कर रहे थे वो एग्जिस्टिंग मॉलिक्यूल का था, तो उनका सेल्स हो रहा था अच्छा खासा, लेकिन अभी ये नए मॉलिक्यूल्स अपने पोर्टफोलियो में ऐड कर रहे हैं, तो आई थिंक कि वहाँ पे थोड़ा सा इशू आ सकता है कि आगे जाके वो बिकेगा या नहीं बिकेगा, तो
हाँ नहीं वो समझ गया आज था तो मतलब फॉर द न्यू कैपेसिटी 2 to 2.5 ठीक है वो समझ आ गया बट आई वाज जस्ट कंफ्यूज मैन तुम्हारे मॉडल में जो 2 to 2.5 था दैट वाज फॉर द न्यू प्लांट या दैट वाज फॉर ओवरऑल कैलकुलेट करने के लिए तुमने अजम्पशन शीट में एक 2 to 2.5 का रेंज ले रखा था वर्स्ट बेस्ट करके ना
Yes.
तो ये पूरे कंपनी को तुम 2.5 पे कर रहे थे या
Yes, sir.
पूरे कंपनी को कर रहे थे
Yes, sir. The capex which is the two big.
हाँ तो that will cause an error then no because your older plant is operating at much higher asset turn so you'll have to model two different asset turns maybe
But so that is the idea that Sandila will not contribute massively, or the existing are at peak, at max. Whatever new chemicals, whatever growth drivers are, would come out of this capex.
Huh.
That is the major idea.
Correct but like Sandila will go to 1100 and then stop obviously like uske
Yes,
baad
this is the this is the
right
more or less, I think I have somewhat clarity, but इसके ऊपर yeah, to study.
yeah my main thing is the main thing that I can't understand and that will be the secret to whether it is undervalued or whether it is temporarily undervalued or whether it is a great opportunity where people are mispricing this is what is their ability to sustain this kind of gross margin. I don't care whether it is 50 versus 45. Anything above 40% is great. I mean, that will allow them to deliver 20% plus ROCs consistently because their asset turns are quite good. Their fixed asset turns are not bad. Working capital is not great, but okay, not too bad also. So as long as they are at around 40-45% gross margin, they will be a good company and undervalued at 17x PE. Now the question is, what in their business model is allowing them to sustainably earn this kind of gross margin? I think that will be the biggest question that I have to answer for myself.
agree, sir. I think that
Because
is the biggest question mark in front of everyone. That has the very competitive advantage of sustaining this very lucrative margin has run out, or the invest or in the future they'll have to compromise on these lucrative
Right.
or that is the very
because
concern.
because you are saying that they are entering new molecules with the new capex, right? तो भगवान जाने उस और आस्था is saying कि कौन से molecules है वो भी नहीं पता, तो मतलब वहां पे क्या डायनामिक्स होंगे, कॉम्पिटिटिव डायनामिक्स, ग्रॉस मार्जिन पता ही नहीं है ना.
Exactly, sir. And the existing also they are facing challenges जो भाई मोड थी उनकी. So that is the very idea कि
एग्जिस्टिंग में चैलेंज क्या फेस कर रहे हैं, ये बात नहीं हुई है अब तक.
So captain or I think we Ayush Mittal's PMS analyst had asked about how Captain also has a new producer or
in India.
Yeah. So, but again, management said that the scale is not of that importance or that danger. So
Okay.
it was an off and on thing.
Okay. Okay. Got it. So you guys know how to use Screener's search facility, right?
Yeah,
You can,
screeners. Yes, sir, yes, sir. Yeah.
yeah, like you can search, you can just
Mhm.
enter captain in the captain or Folpet in the search box, and all the con calls, presentations of every company, wherever that has been mentioned, that word, it will come up. So I just did a search for captain, and no company other than India Pesticides is coming up. Let me just quickly share my screen so that you guys understand
Yes,
what.
so it is. I think they didn't take the name of the company in that discussion as well. So I think
Yeah.
that was
So
some sort of scuttlebutt on his part.
yeah, probably from
Mhm.
Scuttlebutt. So basically, you can see my screen, right?
Yes,
So
sir.
I just wrote captain in the search box here, and see it. It gives me all the con call or presentation wherever this word was mentioned. Yeah. If you guys want to search a phrase together, you have to put it within inverted commas, and then you can put 4 5 words together. It will search all the words exap. Okay. So yeah, so we need to probably check with Ayush Mittal that what company is making it, because any publicly listed company at least is not talking about. So okay, we'll find out. ठीक है. Okay,
Right.
guys. So, Gaurav, I think I am satisfied. Great presentation. Really enjoyed it because company was interesting, and
Mm,
I think you guys did a good job in presenting it. So we'll do further the question answers, so that we capture the thesis in one page of a Word document. That is where, when I analyze a company, that is the product that I want to come out with. That is when I feel like, okay, काम हो गया है इस पे. When you can condense all your understanding, thesis, triggers into one word page. Nothing more than that. So we'll try to get there. I'll send a list of questions. Gaurav maybe will add on to them, and just try to answer them in the next 1 or 2 days, and then we'll capture the thesis, and IPL will be done then.
right. Yes. I think also I wanted to kind of announce. I think Surendra, this is your last probably presentation, right? As we discussed.
Yeah.
Yeah. Cool. I think it was
Yeah.
very nice working with you. Yeah.
Yeah, same here, Surendra. All the
All this.
best to you, and stay in touch
All
with us. And if you need anything, get in touch with us.
Yeah. Whenever you want to come back and
Yeah,
work, I mean, all good.
Yeah,
And I think
definitely.
Sonakshi. Yes. Great.
Thank you very much.
Sonakshi, this is the first.
Yes, sir.
Thank you. So, yeah, so this is the first session, right, with us together. I mean, first day you saw a presentation. So, what was your feeling? I mean, did you learn something, or was it like boring? And
No,
how was it?
not at all boring. And of course, I learned a lot. And I actually learned that how they present the presentation and
Hmm,
also the topics that I have not included in my presentation. So
perfect,
I'm going to pick on them and include in my presentation next time.
perfect. Please get in touch with. I mean, any of the colleagues over here. Just talk to Asta, Mayank. Uh, yeah, and you can get to
Yes.
understand what are the this thing. I've also asked Rishabh to help you out, so bug him. Okay, if he doesn't help you, let me know.
Okay, sir. Sure.
All right. Okay, cool then. Anything
yeah.
else?
No, nothing from my side. Anything else, guys, from your side? All right. Okay, then I think we wrap up for today. Good
Sir,
job, guys.
आई
Yeah.
वांट टू ऐड वन पॉइंट कि इंडिया में कैप्टन का बैन हो गया है. आई डोंट नो व्हिच बैन यू वर टॉकिंग, सुरेंद्र टॉकिंग अबाउट कि एक्सपोर्ट में बैन हुआ है या नहीं, दैट आई डोंट नो. पर इंडिया में कैप्टन का बैन हुआ है तो दे हैव डाइवर्टेड दैट सेल टू द एक्सपोर्टिंग कंट्रीज. और
Oh,
उन्होंने मेंशन भी किया था कि एक्सपोर्टिंग कंट्रीज में दूसरे फंजीसाइड का बैन हुआ है तो इसलिए इनको प्रॉफिट होगा क्योंकि वो ऑल्टरनेटिव के तौर पे काम आ सकता है कैप्टन.
अच्छा, तो ये इन्होंने कॉन कॉल में डिस्कस किया है क्या आज का?
यस सर.
यार, ये कॉन कॉल का लिंक हमें भेज दोगे क्या?
ओके ओके श्योर सर.
या व्हाट्सएप पे भेज दो. दिस इज अ वेरी इंपॉर्टेंट डेवलपमेंट. ये कब हुआ है? इसी साल में हुआ है या?
सर एक्चुअली मैंने पिछले
2020 में, I think.
ओह अच्छा, तो काफी पुरानी न्यूज़ है ये. ओके.
I'm seeing a link in Hindu, but let me see if I can find it out.
या आई थिंक
Paywall
आफ्टर
के
हैज द
behind it.
कॉन कॉल लिंक आल्सो. सो
Hmm.
ओके.
कुछ ठीक है आस्था, भेज दो वो।
ओके ओके।
यार ये भी अगेन गाइस वन लेसन, आप लोगों ने बात किया टॉप 5 प्रोडक्ट्स, आपने बोला कैप्टन टॉप 5 प्रोडक्ट्स में आता है, इतना कंट्रीब्यूशन उतना कंट्रीब्यूशन, द स्मॉल न्यूज ऑफ बैन नहीं लिखा तुम लोगों ने पीपीटी में।
या सीरियसली।
यार ये ही मतलब स्टूडेंट वाले फेज से जब प्रोफेशनल वाले फेज में चेंज ओवर का, आई थिंक ये एक साइन है गाइस कि तुम्हें प्रैक्टिकली सोचना पड़ेगा कि ये कंपनी का स्टॉक, कंपनी को वैल्यू कर रहे हैं, तो अगर वन ऑफ इट्स की प्रोडक्ट्स इज बैंड इन इंडिया, तो वो मतलब कहीं मेंशन उसका होना चाहिए, राइट? बिकॉज एक प्रेसिडेंट है कि एक कंपनी, एक प्रोडक्ट कंपनी का बैन हो चुका है, दैट माइट इंक्रीज द लाइक्लीहुड ऑफ another product being banned, because sometimes companies specialize in a certain type of chemistry, right? And maybe that type of chemistry is slowly getting banned.
सर
तो
ये बैन वाला एक्चुअली रेटिंग एजेंसी के द्वारा लिखा गया था, लेकिन
हाँ
ये जो इन्होंने वो किया है कि दूसरे कंट्रीज में दूसरे वाले मॉलिक्यूल्स बैन हुए तो इसका कैप्टन से बेनिफिट हो रहा है, तो वो उनके
राइट,
कॉल में था।
वो उनके कौन कॉल में, तो दोनों लिंक भेज दो आप,
ओके
ठीक है?
सर। और ये बैन वाली चीज मतलब मैंने माइक वर्ड में ऐड किया था
हाँ,
पीपीटी आई।
तो वर्ड से जो इम्पोर्टेंट चीजें हैं वो सारी पीपीटी में आनी चाहिए,
ओके सर।
ठीक है? एनीवे इट्स अ लर्निंग, बट लाइक इम्पोर्टेंट थिंग्स दैट ब्रेक और मेक द थीसिस, वो सारे आने चाहिए पीपीटी।
Yeah, we will try to reduce our focus on maybe
या द
you know,
बोर्ड एंड स्टफ।
code and all of those things
या
and get directly to this thing.
या
Product कहाँ पे ban हो रहा है कि नहीं, ये सब चीजें.
करेक्ट। आई थिंक फोरेंसिक्स वी शुड स्टिल कंटिन्यू,
Yeah,
बट
forensics is definitely.
या बट द maybe the focus on board we can ease it out a little bit.
Mm-hmm.
Okay, all right guys, thank you, really enjoyed the presentation, take care,
All right.
bye.
थैंक यू सर।
Thank you. Bye bye.
Yeah, bye
Thank
bye.
you.
Bye.
Bye Surendra, take care.
बाय सर।
Bye Sonakshi. Bye Mayank, see you.